So Microsoft was only up less than 0.5% on Friday, but where that candlestick placed on its stock chart is extremely significant for this stock chart pattern that projects big upside potential for Microsoft. I'm going to show you what I'm talking about there in this video. What's up everyone, I'm Brad. Welcome to the Money Dad channel. On this channel I do stock chart pattern analysis. I show you guys trade setups that I think we can make big money on based on the patterns that I see on these stock charts. If you're interested in things like that, hit that subscribe button. And while you're watching this video, if you think that you like it, you're getting some value out of it, hit the like button, leave a comment down below. Come join the community here because we're having a lot of fun with this thing and we're making some money too. So let me show you what I'm talking about on Microsoft. Okay, so this is the candle that we put in on Friday right here. It was, like I said, it was only less than 0.5%, while some of the other big tech stocks were up more than that, like Apple was up 1.5%. It was actually kind of a mixed bag with the big tech, actually, now that I'm looking at it, right? Netflix down 2.5%, probably because coming off of a massive up day on its earnings. Yep, there it is, just doing a little consolidating after its massive earnings report, that's all. And then some of the other ones are, it's kind of a mixed bag. But let's talk about Microsoft here, because this candle here is super important. All right, you can see I've got these two blue lines drawn, and now that we've talked about it a little bit, I'm gonna zoom out just to give you guys an idea of what the chart pattern is that I'm talking about here. Okay, so let's go ahead and zoom out a little bit so we can see the full stock chart pattern. This pattern goes all the way back to September of 2020. Okay, this is a massive consolidation phase on Microsoft, and I've been waiting for it to break out underneath one of these blue lines or above one of these blue lines, and it finally did. We have a breakout above this resistance level on the Microsoft chart, which suggests it is going to continue higher, right? Because this is a consolidation phase coming off of a bull run earlier in 2020. Let's back up even further. You can see we had this big bull trend, this big bull run, right? All the way through 2020. I mean, we are going almost straight up here, right? And then we entered this consolidation phase, right? Price is just kind of chopping sideways, pretty big swings at first, and then smaller swings and smaller swings and smaller, and we're creating this cone shape until you get to the point where it has to break out of one of these, right? At some point, it's going to break out above this blue line or below this blue line. We just had to wait and see which one was going to happen. Well, we got to break out above the resistance, above the top. That suggests that this pattern wants to continue what was happening before it. We have a bull run, a bull trend. A consolidation phase typically continues whatever trend was happening before the consolidation phase, more often than not. Not always, this stuff isn't 100%, but more often than not, it wants to continue whatever was happening before the consolidation phase. So we have a bull run before the consolidation phase, so this consolidation phase is suggesting, hey, it's probably going to break out to the upside, and look at that, sure enough, it did. So now that we have that breakout, what do we do about it? What does it mean? It doesn't matter if we can't do anything about it, right? Well, we can set a price target. We can project where we think this stock is going to go based on the size of the consolidation channel, okay? So look what we have here. We have this really wide opening of this consolidation channel, and then it starts to funnel down and then break out. We use the width, the height of the consolidation channel at its first touch point right here. I'm going to use that height to project the price target for Microsoft going forward, okay? So let's go ahead and do that right now. Let's get our ruler, start down at the bottom, boom, measure up to the top. You get $37.30 of width, the width of that consolidation phase, $37.30. So we come over here to our breakout and we add $37.30. If we think that's where the breakout starts, which looks pretty good, we add $37. All right, that looks pretty good right there. We get a price target of $263 on Microsoft. All right, what does that mean? Well, Microsoft is currently trading at $225. So you're talking about, like we just said, $37 of upside, but you're trading at 225, you're targeting 263. It's a pretty good chunk of change you could make there. There's a 16.5% upside on Microsoft that this consolidation phase is suggesting. Let's get our line on there so it's kind of a little bit more permanent. Okay, now we got our line on there so we won't forget it. So does that mean there's definitely going to be 16% of gains on Microsoft in the near future? No, it does not. This is a projection based on a probability that it's going to head in that direction, right? This is not a guaranteed thing. We're just playing the odds here that more often than not, after a breakout above the resistance in a consolidation phase coming off of a bull run, that we hit that price target more often than not, okay? We need to watch for a few things going forward though, and those few things are, 1, a head fake. What's a head fake? A head fake is when you get a candle or two to close above that resistance and you think you're good to go, so you enter that trade and then it just cuts to the downside right there, right? You get a couple of candles that close above the resistance and then it drops back down in. So be careful of that, right? I would suggest setting a stop loss. I always recommend stop losses if you're going to enter trades like this. If they're going to be swing trades where you're not investing long term on a stock, you always should be using stop losses to minimize your risk. Okay, so if you enter a trade at say $228, you set your stop loss to just below this resistance line. So if it does break down into that channel, it auto sells for you. Okay, you don't even have to worry about it. You don't have to think about it. It just does it for you so that you're not stuck holding that stock as it continues to drop. All right, so I definitely recommend a stop loss always on these swing trades. So that's one thing to watch out for, is that head fake. Another thing to watch out for, this earnings report right here. Microsoft reports earnings on January 26th, and that is unpredictable. We don't know what is going to happen with the price action after an earnings report. That's a fundamental play, right? These stock chart patterns are technical analysis. It's a technical way of trading stocks, whereas earnings reports are fundamental and they are unpredictable. So I don't normally recommend trading stocks through earnings calls. So I'm just pointing that out to you guys. Hey, there's an earnings call coming on 26 January. So you might want to wait until after that earnings call to enter this trade. That said, that earnings call could do something crazy to this stock chart where we just, it just kind of invalidates this pattern. So it might not make sense to enter that trade anymore after that earnings call, because the price action could get a little crazy there, right? If investors really like what they hear on the earnings call, this stock could just shoot up through the roof. If they don't like what they hear on the earnings call, it could drop, right? Or anything in between. It could just chop sideways. So I would wait until after the earnings call and then reassess what the chart looks like. And then real quick, I just want to talk about some of the other big tech FAANG stocks, because whenever I make a video about one of them, I want to just briefly discuss some of the other ones, because I do think a lot of them move in unison sometimes on some of these swings, right? Not all the time, but these big tech stocks are just so big, and they're in these massive index funds, and these massive institutional investors buy and sell all of them together, that it's enough power to kind of move them together sometimes. So looking at Facebook real quick, it broke down under a similar consolidation phase, but it's starting to trend back up. It's getting there, right? It's getting there. See what happens there. Apple has a cup and handle, and we are getting really close to breaking above that lid, which is so important for a cup and handle. That is the buy point. Once you have a candle close above that lid line, that's where you enter your trade. So if Apple has one more green day, it's going to close above that lid, and it's going to be a valid entry point for a cup and handle trade. And we would be targeting $170 on Apple. So we are very close to entering a trade on Apple. I'll make another video on that if we get there. Tesla has this little tiny bull pennant going on. I don't know that we've broken out of it yet, but if we do, we would be targeting, why did I say tiny? I mean, we would be targeting $1,100 we would be targeting over $1,100 if we break out over this bull pennant resistance right here. So not a tiny bull pennant, it just looked tiny at first. Yeah, so we would be targeting some pretty high upside here on Tesla if that happened. What do you guys think of my stock chart art? I mean, this kind of looks like, I don't know, what does that look like to you? It's kind of a strange picture. I don't know. Anyway, let's move on to some of the other big tech. What do we got going on here? Amazon. All right. Amazon has a, what do you think it is? A consolidation phase? Shocker, right? All of these big tech stocks are entering the end of their consolidation phases. We're going to start seeing some breakouts. Facebook was the first one. It broke down under the consolidation phase, but like I said, it was getting close to getting back into it. And now look where Amazon is. It's at the top of the consolidation phase. It hit that touch point and bounced right down off of it so perfectly. You love to see it, but what I would love to see even more if it would just break out above that resistance so we could enter a trade here and target some massive gains on Amazon. I mean, we're talking upwards of $4,300 almost on Amazon if it could just break out above that resistance. So really love to see what's going on there. You know, we'll see if it can break above that resistance. Netflix reported crazy good earnings, I guess. I don't know. I'm not big into the fundamentals, but this big gap up right here was on their earnings call, and it's just been kind of consolidating since. So that might end up being a bull flag or a bull pennant. We'll just have to kind of wait and see what happens there. And then the last of the big tech FAANG stocks is Google. They also popped to the upside on Netflix's earnings call. So it seems like this one is kind of moving in unison with Netflix right now. And then you see these two little consolidation candles, just like Netflix had those two little consolidation candles, right? So pretty similar stuff going on there, but Google broke out of a channel that it was in when it moved with Netflix. So pretty interesting that it was in this channel right here. It was coming off of a pretty big run up, entered a channel, and then boom, blasted right out of that channel. So pretty interesting there that it is moving almost lockstep with Netflix. And those two are moving differently than the other big tech stocks. So there does seem to be a little bit of divergence there. Okay, so that's all I've got for the big tech stocks and for Microsoft in this video, targeting some pretty good upside potential on Microsoft. Hope you guys liked it. I think we've got 16.5%, I think it was, of upside potential on Microsoft. And I threw in a couple of caveats there that I need you guys to watch out for with this trade, like the earnings report and a possible head fake. So make sure you guys put your stop losses into these trades if you are trading this stuff. And I should say, if you are trading this stuff, I am not a financial advisor, so please do not make these trades based off of what you are seeing in this video solely alone. This is just my opinion. It's for entertainment purposes only. I have been doing this for 15 years and I have been successful, but I cannot give you official financial advice. So don't sue me, bro. Okay. All right. Look, guys, that's what I have for this video. I hope you'd enjoyed it. I have been off the air for a couple of days now. I've been super busy at work. I do have a day job. Maybe one day this will become my job. I don't know. We'll see. But having a lot of fun with the YouTube video stuff. Really appreciate all you guys watching my videos, subscribing to my channel, supporting me, leaving comments down below. It's been a lot of fun. I'm so happy with how far the channel has come. It's really kind of hard to believe, but I love it. I'm having a blast doing it. I hope you guys have been enjoying these videos. And, you know, I'm going to be making a ton more. I really want to do one video a day. It's just sometimes not possible. You know, I mean, I've got real life stuff. You know, I've got a family. I've got a job. You know, sometimes we like to travel a little bit and go see extended family or friends, or just go see different parts of the world, you know. So, you know, I got different things going on where sometimes I just can't get to one video a day, but I really do try to push out one video a day. And I'm going to be making some videos ahead of time that I can have scheduled that aren't about the live stock market, more like how-to type videos that I can schedule to post on days where I can't make a video. So that's the plan going forward. I've got a lot more good stuff to put out. These trades will just keep on coming, and I will keep on telling you about them. Okay, guys? So that's what I got for this one. I will see you guys in the next one.